Hello everyone, welcome back to Lab for Crypto. Today Bitcoin and altcoins are dropping after the spot Bitcoin ETF launch in Hong Kong, and the market is starting to feel bearish and even speculating that the Bitcoin top was in March and we should expect Bitcoin to continue to go down, even reaching prices of 20k. Of course, this is something that I do not believe, and I have prepared some graphs that I will explain why I believe this year can be one of the most bullish years for Bitcoin, and therefore prepare accordingly. But also, in the end, I will touch on the scenario that if that scenario happens, I will flip myself into the bearish side and therefore starting to build my exit strategy ASAP, and I will touch on that in more detail in a future video, but in the end, I will basically say the main idea behind this scenario. Let's dive into the first graph, which I think is the most important one as well. This graph is showing the Bitcoin market cycle peak to peak ROI. ROI stands for return of investment. And imagine that someone was unlucky enough to acquire Bitcoin on the previous cycle peak. And using this graph, we can find out how many days it took him to break even on his investment. And of course, calculate the ROI until the next cycle peak. But let's see an example with the current cycle and compare it with the other cycles, so it will be better for us to understand the meaning of this graph. Imagine that Bob acquired Bitcoin on November 2021 at the exact top. He was expecting that Bitcoin will go to the six-figure region, but he was mistaken. If we measure his ROI, you will see that the green line, which is Bob ROI, is moving below the red line, so it's in the negative region, and it took him 848 days to break even, the cycle 4 here. But if we compare it with the other cycles, which imagine that someone acquired Bitcoin on the exact top in December 2017 and also in December 2013, these two people, it took them 1,081 days to break even and 1,178 days to break even. The break even region is better seen where the lines are crossing the red dotted line. That's why I also put it the vertical dotted black lines to help you see the number of days better. What that tells us is that actually Bitcoin this cycle is ahead of schedule, because I think of the bullish news of the spot Bitcoin ETFs in the US, alongside the geopolitical uncertainty, which in my opinion Bitcoin thrives, it led to Bitcoin move ahead of its time. Therefore, my expectation is that Bitcoin will chop around as we move into the summer. Altcoins tend to perform really bad in summer. Therefore, I expect liquidity from alts to move to Bitcoin to sustain its price above its bull market support band. And as we move to the elections in November and also the start of the quantitative easing, Bitcoin will start to see these moves, the exponential moves that it sees only in the regions where we're starting to see this bubble section, the 1 year bull run, which goes parabolic, and then start to decay to its fair value, which we discussed many times. But let's stick to this part first, and then we can move later on to the other parts. In short, if Bitcoin moves in above its bull market support band, which if we check, it's now at 56k roughly, 55.7. It's bullish news for Bitcoin as long as it stays above the bull market support band. And as Bitcoin is chopping around for the past month, I expect the bull market support band to continue to go up if you project this line, and eventually they're going to meet. And I hope that Bitcoin is going to hold its bull market support band. And therefore, I will feel more confident that as we move to the Q3, Q4 of this year, Bitcoin will go as planned and reach six-figure prices as we move to 2025. But let's check some graphs that it will strengthen my expectation for Bitcoin in Q3, Q4. This graph is telling us that Bitcoin is the asset that I think people will move on, and also governments and also institutions, when they check this graph. US public debt is basically in an exponential increase, which makes the US public debt unsustainable. And therefore, I don't see any way out for the Fed to start printing money and debase the debt of US and be able to pay all this money back to the people that they own. As a result, Bitcoin, I think, is the currency that most people are going to lean on. Of course, traditional finance people, maybe they are going to lean to gold, but my expectation after the ETF launch, I think people are going to allocate some of their capital to Bitcoin as well. And therefore, in conjunction with the money printing, the start of the interest rate cuts, which the market is projecting now to be also in November, but as you see, the probabilities are really close to happen also in September, and the elections, I think Bitcoin is poised to the six-figure region really easily in the Q4 of 2024 and the start of 2025. The only way that I'm going to start to become concerned that this scenario is not going to play out is to, first, Bitcoin will not hold its key moving average, the bull market support band, as I said, and we need to continue monitor this value. And when I see the market value to realized value cross line with the 365 days SMA. And let me elaborate. The green line is the 1 year basically SMA of the MVRV. And when we see the MVRV cross the green line, we are starting to see these bullish moves for Bitcoin on the upside. But when this line, the MVRV, crosses and moves to the downside from the 1 year SMA, we are starting to see the bear market basically kicking in. As a result, I'm monitoring these two really closely alongside the price vs risk of Bitcoin. And if I continue to see Bitcoin moving to the lower risk bands, which means it's starting to lose ground, I'm gonna starting to build my accumulation strategies, because we were fortunately enough to accumulate Bitcoin in regions between 15% risk to the 30% risk. And therefore, as Bitcoin is continue to move to these regions and also be able to not hold its bull market support band, and the MVRV starting to cross on the downside, as I show you. Let me go to the graph. And as I will see the red line move and cross below the green line, I will start to feel that the bears, they actually were right, and Bitcoin will move to lower prices close to the 20, 30K. That is a point where, depending on the stage of the market, I will be willing to start exiting the market and re-enter at risk levels, at low risk levels, which in the last cycle it served me really, really well, and also start to monitor the bottom range for Bitcoin, and also it will help me find these regions where are the best accumulation regions for Bitcoin. But to be honest, I think this scenario is very unlikely. It's just because the interest for Bitcoin and crypto is dropping, and that in summer is something is expected. But if we go to the Google Trends, you'll see we reach values that we had in the bear market. And in short, it means the interest for the crypto market, it's very, very low. And of course, every asset price is increased based on supply and demand. So then demand side now is in the low levels. And if we go to the, just a moment to find the profit and loss, sorry, you will see that a lot of holders are in the profit region. 87.38% of the supply is in the profit region. And the important aspect of this supply that is in profit, it doesn't seem that is willing to start to exit in the market, as if we check the 6 months hold supply, you will see that 64.73% of the Bitcoin supply has not moved for more than 6 months. This means that people are not willing to exit the market at these prices, as they are expecting Bitcoin to move to much higher values. As I said, I'm going to flip to the bearish side if the two scenarios happened that I mentioned before. And of course, the one that everyone knows is if the US market enters a recession. And that is something we need to monitor. These probabilities are changing all the time. And if we don't see any rate cut this year, at least one, is something which the market are not going to like, and therefore I expect Bitcoin to go to lower values. But with the current state of the market, I'm not seeing that scenario. But the markets are dynamic and we need to observe them and study them every day. And that is why we have all these tools to help us make educated decisions. I hope you liked the video, and until next time, bye bye.